into the year, and there's still a lot of uncertainty. We don't know what the policies are going to look like on taxes, tariffs, immigration, lot to work through. But we think it's a regular intra-year decline that we're seeing in the market here. So nothing that would get us off of being too worried here.
What do you do with the big cap tech stocks here? Because you're looking at every single Magnificent Seven starting the year actually in the red, except for Meta, barring Meta. Meta is actually today the only one in the green. Do you load up on these opportunities at a time where investor after investor has been saying it's time to broaden out the trade?
Shanali, the reason Mag 7 has outperformed to the extent is because their earnings are outpacing everything else. That's the reality that we're contending with. The AI boom is real. Even if you look at the hyperscalers, which are the part of the Mag 7, they're spending something like $200 billion a year in those investments. So that thesis still very, very much remains intact. Now, if you have missed that rally, maybe now it's a time to, dollar cost average into some of those positions. We own a couple of the Mag 7 names. We've held them for long periods of time. So we're not getting shaken out of our conviction there. We're doing the work. If they get sold off even more, we think that the long-term fundamental trends are very much intact. So we would take these opportunities to add to those exposures.
In terms of what to expect from the Fed, Nimrod, and how much it matters, what's your outlook? I mean, everybody had been pricing in continued cuts this year. Now there are some, Bank of America, saying it's possible that the Fed raises rates this year. What do you see, and how much does it matter to your investment case?
Well, we've been yo-yoing all over the place with the Fed actions. We started off 2024 expecting 6 rate cuts. We got 3, right? And the 10-year, even if you look back to 2024, went all the way from 3.7 to 4.7. Again, all these data-dependent scares that come up to the market. So we think that, yes, anywhere between 4.25 to 5 is a fair value for a 10-year yield. There is a secular long-term pressure upwards on the yield because of the aging demographics. So we've been taking our time to add exposure there as the yields back up. But overall, the Fed remains very data dependent. We've got good prints that's put Fed on pause. That's not to say that down the road, this is so early in the year, we might get some other prints that are not that compelling, and we might have the rate cuts back again on the table again. Not to mention that we still do not have a lot of certainty and visibility on the policies of this incoming administration at this time.
I also want to take note of the VIX at this moment because we are at a 21 handle that is slightly elevated. The 1-year average is about 15. So we are above that for sure. If you think about the data points we have ahead, we have PPI, we have CPI, and investors are still keeping a close eye on inflation here. Do you wait for some of those critical moments to pass before you put on some of these larger trades, given that clearly the market is expecting some more volatility?
Yeah. The background is of higher volatility. Within that, picking exact days is very difficult. So the best way to do is just dollar cost average. We're going to get some of these prints. Some of us are forecast wrong. We know that. And with that assumption, we're just going to kind of, bite the bullet there, and we just leg into our positions as we move forward.
Nimrod, great to get your take today. Thanks so much for joining us. Nimrod Kang there of North Star Asset Management. Coming up, we're going to head back to Katie in San Francisco, where she's sitting down with the CEO of Teva Pharmaceuticals, Richard Francis, on a down day in the markets. Also happening now, U.S. National Security Advisor Jake Sullivan is speaking with Bloomberg's Jenny Leonard as the Biden administration enters its final week in office. This is part of our Newsmaker series, and you can listen to the conversation by typing Live Go on your terminal. This is Bloomberg.
Your overarching approach on China, as you mentioned, has been to responsibly manage the relationship so that competition doesn't veer into conflict. Over the last 4 years, but also more recently, we've seen major hacks of
inflation here. Do you wait for some of those critical moments to pass before you put on some of these larger trades?
One of the very critical things is that a lot of young entrepreneurs don't realize is that when you start as an entrepreneur, you're not just building your business, which of course you are, but you're also building your organization. And most people don't realize that. And building an organization is not just about hiring people. It's about the culture, it's about the systems, the values, the mission. It's about how you operate, how you do things, how you retain people, how you keep them motivated. So it's all of those things put together. And over time, you realize that, a lot of effort has to go into it. And then eventually you have an organization that has a life of its own. It's, and it's sometimes you look at it and you marvel and you think about, how was this created? And was I the person that was behind getting this thing done?
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg loves earnings.